Hello, my name is Seewing Yee, and my YouTube channel, just so you know, I report two types of information. One is the ongoing general housing market throughout the country, and I utilize all the up-to-date resources to give you some critical real-time information. And the other aspects of my YouTube video presentations are real estate investing news. So yeah, I would consider myself, I would say I add more value than a typical real estate YouTube channel because I cover both aspects of it. If you see value on this video, please smash the like button and subscribe to my YouTube channel. And finally, if you want to get involved in turnkey real estate investing, buying out-of-state investment property, please visit my website below and subscribe and drop your email into the subscription list below, or so you can receive weekly email turnkey newsletters so you can learn and educate yourself how to become a real estate investor. So without further ado, let's proceed with this. And today's headline, I'm going to use the Redfin report dated April 28, 2023. And the Redfin's headline says housing market update. DERF, I don't really know how to pronounce this word precisely. DERF is not deaf. Could be deaf or inventory, but DERF, right? Wow. Sometimes I have an accent challenge, if you will, even though I spend most of my time in the US, but still. Anyway, that's neither here or there. DERF, new listings keep home prices from falling further. So you can see my yellow highlight. It says right here, new listings are down more than 20% from a year ago as homeowners hang on to low mortgage rates. That's causing buyers to snap up homes quickly and keeping prices from falling further. Prices are down by roughly 3% annually, similar to the declines we have seen over the last month. So new listings of home for sale fell 22.4% nationwide from a year earlier during the 4 weeks ending April 23rd, 2023, one of the biggest declines since the start of the pandemic. Homeowners are staying put because they want to hang on to their historical low mortgage rates. By the way, today's mortgage rate per Mortgage News Daily, as you can see, is still volatility is here, is up over yesterday at 0.14% basis point on 30-year fixed rate mortgage, as reported by Mortgage News Daily. And this is up from the previous day. And if you are someone with very, very good credit will qualify for this particular rate for primary home owner occupied buyers. Investment loan rates are slightly higher as always, because that's the way it is. And if you are a VA buyers, your rate are a little bit lower at 6.31%. And if you FHA buyers, your rate are even slightly lower at 6.30%. All these rates are, again, based on someone who have excellent credit. So yeah, so 6.73% is a little bit challenging. And it's just, I would say that's a new normal, right? So let's get back to our regularly scheduled article, getting back to over here. And then that's in despite of the elevated mortgage rates, keeping some buyers on the sidelines with pending home sales down 17% year over year. You're going to see a lot of downward trends when I share with you those trending numbers, if you will, throughout this video presentation. So the prices are falling more in some parts of the country and increasing in others. They are down mostly in Austin, Texas, year over year, minus 13.7%, Oakland, minus 13.5%, and San Francisco, minus 4.3%. By the way, I physically lived here in San Francisco Bay Area for more than 30 years. So I am very much aware of the volatility and the cyclical nature of the California housing market, having gone through a number of real estate cycles throughout the years that I lived here. All right. So with that said, let me see what else. However, high mortgage rates have caused some buyers to continue to stay off the sidelines, but there are still more people looking for a home than there are homes for sale, said Redfin Deputy Chief Economist Taylor Marr. So in certain part of the country where new listings are especially rare, sellers are priced their homes in line with the market or attracting multiple offers. As a matter of fact, the sellers are having better realistic expectations moving forward as opposed to the last half of last year, 2022, when many sellers are in denial and they price their homes way above the market price. Therefore, they will have a lot of price drops as a result of their in fourth quarter in 2022. Now they have a more realistic expectation and they are pricing their homes to sell, especially in a good location, and they are a good, clean, turnkey property in a good locations. They are priced right. They are gone within days. But again, real estate is hyper local. Every market is different. In fact, I challenge some of you who are watching to make comments below to share with me where are you located, what is going on in your market in terms of the market conditions. Are you getting multiple offers in your market, or your homes in your market or not in your neighborhood, or selling or not selling? Tell me some details I'd like to know, because there are more than 400 MSA. There are more than 400 metropolitan statistical areas markets in the country. So as a matter of fact, I spoke to one of my realtor friends that I know for many, many years here in San Francisco area. Get this, his name is Tony Bruno. He said about a week ago, he said he's a local realtor in Fremont, in the East Bay of San Francisco. And he said he's representing one of his buyers, and they are trying to bid this home in Fremont that were listed for $999,000. Yeah, 1,200 square foot, built in 1972, single family home, bedroom, two bath, and have a decent sized lot, around 5,000 square foot lot. Guess what? This home seller have received, and I'm not kidding you, 66 offers, 66 bona fide serious offers for this house in a cookie cutter house in Bay Area, less than $1 million. 66 offers, and the winning bid was someone who who's paying cash, and the winning bid was, get this, $1,275,000 cash offer. That is absolutely insane. So I know this is a small sample size. I'm sure in every local market, every single day, we have received something somewhat similar, not this drastic. Of course, California is always quite different than most other markets. But share with me what's going on in your local market. What kind of offers have you been seeing? If you are a realtor, give me some samples of what's going on with your clients and your specific local market. I'm very, very curious to hear from you. So make a comment below and I will do my best to answer your comments on this video. That is insane. I mean, I'm not saying 2021 is a anomaly, is a year which will never be duplicated ever again, because in a low interest rate, mortgage rate environment, historical low environment where people are getting, getting 3.5% or lower mortgage rates back in 2021 is a historical year. Is a once in a lifetime situation where, some market you're getting 50 to 100 offers on a routine basis back in 2 years ago. So those days are done. Hopefully we're not going to see that again. We do not expect to, I don't expect in my lifetime, even yours lifetime, to ever see mortgage rates under 4% again. I could be wrong, but I don't think that will ever happen again. So there's a once in a lifetime opportunity for those people that were able to pull the trigger a couple of years ago. So congratulations to those of you that did it, that have the courage to do it. And so, all right. So let's see what's going on. One of the Redfin agents that was interviewed for this article in Phoenix says his buyers are waiting in line because there are so many prospective buyers there. It was the first time in a year that I have had to wait in line to see a house. So waiting in line is a new word back in vogue again. And all this means basically, some of you heard about it, so I will repeat this again. This a comment I'm going to say, or really no different in the past couple of months. I kind of anticipate this is happening, and the sentence was mentioned right here: inventory will remain tight as long as interest rates are high as it is right now. Okay. As long as interest rates remain in the mid sixes, we will continue to see this volatility, this moderation, this little bit of multiple offers in various markets because most sellers are staying put. They're locked in at the historical mortgage rate. There's no way they can sell their homes locked in at 3% rate to move up to upgrade to another home paying 6.5% mortgage rate, essentially doubling their mortgage payments. This just does not make sense. So that's why we're going back to historical low inventory rates all over again. So that's what's going on right now. So this is potentially the new normal, what they say. All right, so let me see what else is going on here. Let me skip over down here, the data based on homes listed and also during the period. So let's go through the highlights again. The median home sales price was $367,053, down 2.8% from a year earlier. That's 9 straight 4-week period of declining sales prices. Wholesale prices declined in 29 of the 50 most populous U.S. metros, with the biggest drop in Austin, Texas, at minus 13.7 year over year, followed by Oakland, minus 13.5%, San Francisco, minus 12.3%, Anaheim, minus 10%, and Sacramento, minus 9.4%. However, every market is hyper local, so I continue to share that with you on a consistent basis. Sales prices, or the other neck of the woods, if you will, sales prices increase most in Fort Lauderdale, Florida, where they rose 10% year over year. Next come Miami at 8.7%. Then Cleveland, surprising, at 7.9%. Cincinnati at 7.5%. And Columbus, Ohio at 7%. Just share this with you. Again, every region is different. Every market is different. What I've seen, the big picture is the Midwest markets, the Midwest part of the U.S., because during the pandemic, their housing prices did not skyrocket. So they were very, very stable market during the past few years. And I'm not surprised that the Midwest markets have very stable, have increasing price gains as we speak. So, it's Midwest market is a more stable, whereas the Western region of the U.S. is more volatile, especially on a historical basis. I'm not surprised by that. And South and Southeast has also been doing very, very well during the pandemic situation. Again, Wilson is very, very hyper local. Having said that, the monthly mortgage payment for the median asking price as we speak is $2,555 at 6.43%. Now, as of today, as I'm recording this video, this is 1st of May, so time flies. So 1 May 2023, and the mortgage rate daily interest rate is 6.73% for someone who has good credit. Keep that in mind. So therefore, this mortgage payment will be slightly higher than $2,555 monthly, and that is an all-time high. So, and it's up 12% from a year ago. So what does this mean? This all-time high in mortgage payment at around almost $2,600 per month based on a median price. Now the mortgage rate has jumped, but that will make home affordability even harder, especially for first-time home buyers. This category of people will continue to be challenged moving forward. They can, we are at a 40-year affordability high in terms of home purchases, and the elevated mortgage rates with the rising prices. The prices are rising. As a matter of fact, let me share that with you or another map. Look at the Redfin weekly housing data. The median sales price. The blue line is 2023. The home prices since February, the past couple of months, has already increased by 6%. Okay. So we're seeing home prices increasing throughout this past few months. And based on what's going on, I believe this will continue to increase because of the historically low inventory and pent up demand. Still, there are some very well qualified buyers out there who are still more than going to buy, especially right now, the spring season. Historically speaking, the spring season every year we have seen housing activity. However, this spring buying season, which April and May is the most heightened, most sales activity occurred during April of every year, but now we're seeing downward trend in terms of new listings and active listings, which I will share the data with you momentarily. So this trend that we're seeing so far this month and this year, it has been historical. It's very, very contrarian, very challenging as well. Pending home sales, here we go. She's looking at all these downward trends, which spells trouble for buyers. Okay. Pending home sales fell in all 50 of the most populous US metros. They declined most in Las Vegas at 39%, reduction in home sales year over year. Seattle, 38.9. Portland, Oregon, 38.7. Chicago, minus 36.9. And Oakland, minus 36.2. You know what I've noticed? You know what I noticed? That the markets that will have a lot of skyrocketing home prices 2 years ago, and now the prices that came down throughout the last half of last year, these type of volatile markets, now they have extremely low inventory, lower than the national average of 2.7% month supply inventory. A lot of these Western region areas I just mentioned, they have like a monthly inventory of less than 2 months in California and other places I just mentioned, which is very interesting, something we need to keep track of. All right, getting back to this article. Again, we speak of the month of supply. Just to reiterate, right now, nationwide, according to Redfin, the monthly supply of inventory was 2.7%, 2.7 months, up from 1.9 months from a year earlier at April 2022. However, 4 to 5 months of supply is considered balanced market with a lower number indicating seller's market conditions. Right now, we are still technically in seller's market, and it's going to continue to be more seller's market because I can't see how supply of inventory suddenly going to shoot up. Okay. So some of you are thinking, well, what about the new builders? What about the resale side is very, very low inventory. What about new construction? What about building? Yes, I know some of you are asking those kind of questions. Yes, the new builders are wrapping up. They're trying to put more new homes inventory into the market. But as much as they are trying to do so, it's still not going to make up for the offset of the very, very low resale inventory available out there. Does that make sense? All right. So this trend is really very troubling, especially for buyers. Almost no inventories out there. Let's go over the chart. Median sales price, although is minus 2.8% year over year. However, that's a little bit, the data is a little bit misleading because in the last half of last year, you see a downward trend in median home sales prices. However, ever since around February, 2 months ago, the median sale price has been steadily increasing due to the extremely historical low inventory and still more than sufficient number of buyers out there who qualify and are very motivated to buy. As a result, we are seeing some multiple offer bidding wars, especially in the lower end of the bottom end of the medium price, the entry level homes or the market segment that we have seen a lot of robust activities. Okay, so medium sales prices for the past 10 years, as you can see, has continued to increase. Appreciation of homes has been very robust in the past 2 years. So, for anybody that has been that cat crash bulls out there for the past 9 months, you guys did a good job of manipulating the market and getting a lot of subscriptions and clickbait on those kind of things. But sorry, there's no crash out there. The crash goes. Hopefully, some of you can go out of business. You can nothing else to talk about. Medium asking price. Okay, I went over that. All right, home buyers' housing payments has, as I said before, because of the home prices increased and the mortgage rates are still elevated. The mortgage payment has increased year over year by almost 12%. Again, that means there are fewer and fewer buyers able to qualify for homes which they were otherwise they would qualify a year ago or even 2 years ago. Now it's getting harder and harder, and so that's really a shame. Okay, pending sales again. Pending sales is 17% lower year over year. Here it is. Here's a pending sales, a little bit of 86,000 homes that are pending right now as of April 23rd. And it's a lot less than last year. Last year was around 100,000 homes that were pending. And the year before was even more than 100,000. So the trends are really, really very, very challenging. New listing, same thing. New listing is down 22% year over year, as you can see right here. Again, the sellers are sitting put. They're not moving because of it just doesn't make sense for them. They have a locked in historical low mortgage rate. Many of them have a rate or less than 3% 30-year fixed rate mortgage. So they are laughing their way to the bank and they are sitting in the real estate lottery, if you will, with the mortgages that they have. Not really new listings are not sufficient to meet the demand, as you see right here, minus 22%. Active listings, same thing. And usually, springtime, April time frame, usually you have seen a tremendous amount of active listings on a historical basis, but you're seeing a opposite trending downward. This orange line, 2023, the active listings have been decreasing ever since the year began. Right now, there are only 704,000 active listings. And during the before the pandemic, the active listings are way more than 1 million. So we are at 50% less inventory year to date compared to the pre-pandemic. This is trending the wrong way. Again, I already mentioned the low monthly supply at 2.7. The way it has been trending ever since the beginning of February. It's like a vertical drop, like a steep drop of supply of inventory for the past 3 months, and still trending, could continue to drop at below 2.7% months of inventory. So this is a very, very troubling, and compared to the other month or other years is not good. Okay, 47% of pending sales were under contract within 2 weeks. So homes are priced correctly or selling like hotcakes in many, many markets. Homes sold in the medium time frame of 34 days, although it's less in the past 2 years during a robust housing market uptick, but less than the pre-pandemic historical normal. All right, so 1/3 of the homes are sold above list price, and 2/3 of homes are sold slightly below the list price. So, okay, and I think that's pretty much I have to say. Yeah, the demand is a little bit less year over year due to the high mortgage rate and people being priced out from purchasing homes, but still demand enough to meet the limited supply of homes. So the takeaway is this to me, before we conclude, is that as long as the mortgage rate are staying elevated around the mid sixes, we will continue to see this type of data, this type of trends, meaning The sellers are not bulging. They are keeping their mortgages. They are not selling their homes. And we still have bidding war and multiple offers going on in many markets, especially the entry level, lower than medium price homes. The luxury homes in many markets are sitting longer, obviously, and they may still have more price reductions to go. They're harder to sell. The luxury homes are 700K to a million or more, depending on the market. But the lower price homes, the entry level homes is really in demand. That's all I have to say. So if you see value in this video, please smash the like button and subscribe to my YouTube channel. And finally, subscribe to my real estate investment newsletter. Just visit my website below, drop the email into the form. If you are now subscribed to my real estate investment shop, please do so, and you will receive weekly investment opportunity updates about king honesty investing regardless of the. So thank you so much and for watching. This is Seewing Yee, and I will talk to you over the next video. Have a nice day. Bye.